All right, so today I'm doing something bold, maybe even a little bit stupid. That's gonna be very different from what I usually do on the channel. I'm handing over my entire stock portfolio to my AI assistant Tiara to analyze it and roast me. Yeah, I'm talking about brutal honesty and total transparency here with screen shares and everything else that you'd want to see. Now, the truth is, I like to talk about investing here on my channel, so it's time for me to show you a little bit behind the curtain with my own strategies. The question is, will AI expose me as a clueless idiot?
Well, maybe it will, maybe it won't.
Or will it actually help me step up my game? So if you're nosy, curious, or just really want to know what I invest in, stick around. Now I'm going to be starting this off by actually logging into my investment account here and actually showing you what I'm invested in and explain why I think that these are good investments. And then I'm going to let Tiara analyze it, and then I'll tell you, basically what she thinks. Okay, so let's log into my account here. So this is my investment account. So this is Schwab, my login here. This is definitely my biggest account in like personal account for investing. Custodial account that I have. I do have other accounts, but those are pretty boring. They're mostly mutual funds, things like that, that honestly wouldn't make a very good video and wouldn't really make sense for this type of video. So I'm not going to be talking about those. I'm just going to focus on this one account here. And yeah, we'll just kind of go through it. Like I said, I'll explain why I'm invested in what I'm invested in. We'll go from there. So total account value right now is $314,406. Yeah, I mean, total gain loss has been $98,000. It's actually a little bit more than that because I took essentially a distribution. I had to rebalance my stock portfolio. I've talked about that a number of times on the channel, but I had to rebalance my stock portfolio because it was kind of getting out of whack. Believe it or not, I had way too much NVIDIA because I bought before they split. If you recall, that wasn't too long ago. I did all that and it was just, I was having crazy fluctuations each day in my account and I didn't like that. I don't mind risk, but when you're seeing $20,000, $30,000 fluctuation each day, that's too much. That's scary for me. So I had to rebalance it. But talking through that, let's talk about why I have these different things. So NVIDIA I have because it's NVIDIA. I don't think that I have to explain that one. That's obviously a good stock to have right now. I'm lucky in that I bought that stock, I don't even know how long, 4 years ago, 5 years ago. My dad had talked about it, 3, 4, 5, I don't remember how many years it was. I bought that, I've been in that one for a while. So yeah, it's been obviously a huge winner for me, but NVIDIA, I've held on to it. Like I said, I sold a good amount of it to rebalance the portfolio because I just had too much. This is a third of what I had previously. It was, what it is, 180 times 3. So that's what it was at one point, and it was just too much. So I've had to sell some of it, but NVIDIA, they're making all their chips. I think it's pretty much common sense. Meta, I actually sold a while back and then I bought back into it. I sold when they were really getting into the metaverse and they changed their name to Meta because a lot of people were like, this is stupid. Why are they changing their entire, everything, their aim, etc. And I think that even Zuckerberg kind of stepped back from that. So now he's really more focused on, hey, wearable technology, which has kind of like a heads-up display in them. They have some really cool technology coming there. And I think eventually the metaverse is going to be a thing. But he's really stepped back from talking about it too much. And he focuses more on the technology and how you can access the internet, basically change it from, where we're not all just using phones anymore, but we're using glasses to actually do things. So he's really talking about that, pushing that hard. I think that's going to be a big one myself personally. Microsoft, I mean, they're at the forefront with AI, with their ChatGPT and being, well, I shouldn't say ChatGPT, with being involved with OpenAI, their investment. I feel like they're going to do really well there, just because, OpenAI is kind of leading the charge with a lot of it. And with their investment, it was kind of a no-brainer, like, hey, that's a good one. Apple, honestly, I don't love Apple as a company. I don't love their products, but they're so huge that I don't know how you don't buy Apple at this point. They're so huge. They're so profitable. They even have, I thought it was really interesting when they did the Apple credit card. They have that now. There's so many different things that they bring in money from. You just have to own it, in my opinion. Amazon, it's Amazon. It's just going to keep growing, getting bigger and bigger. People are going to keep buying stuff. I mean, it's what Amazon is. Plus, their cloud computing has gotten so enormous and strong over the years. So I got that's one of them too. Reddit was an interesting one. So I would never buy Reddit, but if you were following me on X or Twitter, whatever you want to call it, I don't even know what this was, 6-8 months ago, something like that. I called this one, and I don't usually do it. I'm not like a stock caller. I don't call my shots, but I called this one, and I called this one because of one simple reason. So I made a lot of money in websites and bought and sold, had a whole portfolio. I did that and did really well in it. And basically, Google has kind of destroyed that entire industry because they've adjusted it so the AI is at the forefront. AI is now their AI overviews, et cetera. But the one thing I noticed was that Reddit was always near the top of the search results at all times. And then Reddit was going public. And I thought, hey, Reddit's going to blow their numbers out because their traffic is going to quadruple, basically overnight for no unforeseen reason other than Google's favoring them in the search results. That has turned out to be a very good investment so far. And I'm basically keeping an eye on it because Google fluctuates at times. And there may be a time at some point that Google says, hey, we're going to stop this Reddit stuff. They're going to cut them down off the search results. And that's not going to be so valuable. But that's why I have Reddit. Walmart, I love Walmart. I'm going to say it. They have a dividend. It's just one of those companies in a bad economy, they do well. In a good economy, they do well. They're very powerful. They're really pushing forward with e-commerce stuff. They're really the only main competitor that Amazon has, in my opinion. So I like them. I've just always held on to them. So now we get into the more speculative investments. This is where it gets a little bit more fun. So those are kind of like core ones that I have that I believe in long term. And that's the other thing. All this stuff is long term. If I have one big flaw as an investor, I don't know when to sell because I hold and hold and hold for a very long time. So that's kind of one of my problems, but I'm trying to kind of figure that out and get better at that. But anyway, Royal Caribbean. So yes, Royal Caribbean and Carnival Cruise. Those two are totally speculative. So one of the things that I learned a long time ago as an investor, in my opinion, and this has worked out well for me, whenever there is something bad that happens to a company, like COVID, the pandemic had happened, and obviously Royal Caribbean, Carnival Cruise, all the airlines, I also own some of those, they were hammered during the pandemic for good reason. No one was traveling. Of course, their stock was hammered. I waited until things kind of, got better, not better with the pandemic, but started to be less dramatic. And I bought all of them then, and I'm holding on to them now. And the reason why I do that is because if you look before the pandemic, they were rocking and rolling. They were doing really well. Pandemic happens, they fall down, and that's like, okay, well, can they dig themselves out of this? I think that the companies can. So I bought them and held them. So Royal Caribbean, like I said, Carnival, I'll talk about the others in a second when I get down there. But yeah, that's why I own those. I just think it's a good thing. I've always, they all have a lot of debt right now, but they're paying off that debt. So I just think that those are good buys. And honestly, I originally bought Carnival Corporation because I was like, what's the biggest one before the pandemic? They were the biggest. And then I thought, you know what? I'll buy Royal Caribbean too because they're the second biggest one. And that's really the rationale behind it. That's it. I didn't look at a bunch of numbers or anything. That's just it. Coinbase, I like cryptocurrencies. I will talk about them a little bit here on the channel. Not too much. I don't want to get crazy with it. But I like cryptocurrency and I'm a firm believer in it. I have investments in it. So I think Coinbase is the one exchange that's definitely doing things right, in my opinion. Granted, I still take all of my crypto and I don't leave it there. I do use cold storage, etc. But I just think that Coinbase is doing it right of all the companies it could. Next, Tesla. Tesla has been tough. It's been an up down a lot. It's been very volatile. But long term, I really think that they're the bots, I don't even know what they're calling, the cyborgs, the Tesla robots, whatever you want to call them, that'll basically change industries and change the way that pretty much everything works. I'm very bullish on that. I think that's inevitable. And I think Tesla is probably going to lead that charge. That's my biggest sale on them right now. So yeah, and Tesla has a lot of different things that they have going on, but that's probably the biggest thing for me. Carnival Corporation, we talked about. Delta Airlines, United Airlines, again, that was pandemic stuff, and I've just bought and hold. JP Morgan Chase, I bank with Chase. I like Chase. I know Bank of America. I think Bank of America is the biggest. I'm not sure if they're the biggest bank anymore. I know that they're one of the biggest. Basically, it's Bank of America or Chase, or you could do both. I just like Chase better. And Bank of America has had a bunch of issues in the past, different things that they've done that I don't agree with. So I'm just sticking with Chase, and I just wanted to get some finances or financial products inside my portfolio. BlackRock. I hate BlackRock. I hate them. I feel like they're buying everything. They're super greedy. They're just getting into all these spaces that they really shouldn't be. They're, just pumping money in places where I don't really want them to. But if you can't beat them, join them. Sorry, that's really it. They own so much now, and they're just going to get bigger and bigger. So forget it. Coca-Cola. Coca-Cola, I bought mainly because Warren Buffett likes Coca-Cola, and they have dividends that are pretty good. And that's been another thing too. And just in general, Coca-Cola is well beyond just one soft drink. They are a pretty sound business. And I don't see, beverages just going away. I just don't see it. So I bought them. ExxonMobil Corp, honestly, is just because I wanted to get into energy a little bit. That's it. I wanted to, diversify my portfolio, the industries. That's really it. That's the only reason. Same with Chevron, similar thing. Nike, I bought, this one was a while ago, I believe. I just bought Nike. I don't remember why I bought Nike. That's my answer to that one. You can see it's not a ton of money, $616 originally. I don't know why I bought Nike. I think actually, if I remember right, I had some Nike that was pretty good for a while. And then I think I sold some, and this might be the remnant of that, what's left over. That might be what that is. And then Novo Nordisk, they're the ones that they're involved with the weight loss drug. I can't remember. I don't even remember the name of it, but they're involved with the weight loss drug. And I think that's going to be massive. So I just put a bet on them. And so far I'm, not doing well overall. So that's what that one's for. And obviously to diversify the portfolio isn't bad either. Then we get into the ETFs. It's really not all that exciting. I've got S&P 500 ETF. Honestly, I've got these two. I probably just bought one. I usually stick with Vanguard because they have low fees. This one, I don't know exactly why I have these different ones. My guess is that I just bought one at one time and haven't sold it and have held on to it. I prefer the Vanguard S&P 500. And then the world stock too, a total world stock. So this is obviously diversifying beyond just the United States. I think that's smart to do. I don't have a ton of money there, but I did do some of it. And then, SPY, so that's a 500 ETF. This one's interesting. So this is more of I don't want to say gamble, but it's definitely a little bit more aggressive. So this one's interesting. SPXL is very interesting. I may even do a video on it. This is basically an ETF where it essentially 3X's whatever SPY does. That's the whole idea. So every day that SPY does something, so if it goes up 1%, in theory, SPXL should probably go up 3%. However, if SPY goes down 1%, SPXL can go down 3%. So it's basically taking whatever the regular S&P 500 does in a normal ETF and multiplying it by 3. It can be great. It can also be painful. But I like this one because in history, generally speaking, the S&P 500 has just gone up. That's basically what that is. This one lets you times that by 3. That can get a little bit nerve-wracking though, when we are having downturns in the market, which I've seen, and you're losing 3 times more money instead of, losing 1 times more money. So it's not speculative, but it is a little bit more risky. But I personally like it. I've had good results with it, and it's had good performance for sure. But the market's been kind. Let's be honest. And then lastly, we have the mutual funds. Boring stuff. Total stock market index fund right here, Vanguard. I do have a high dividend Vanguard fund that I'm invested in, and then also a dividend growth. So this is kind of dividends, but also growth stocks as well, kind of paired into into one. So that's my portfolio. You'll see I purposely, this is what, before my stock over here on the right side, you can see the percentages. So I have 52% allocated towards stock and 48% roughly between mutual funds and ETFs. That used to be a way worse balance. This used to be at about 70%. And it wasn't that I bought it that way. It was that, like I said, NVIDIA was a big part of it. The stock, my value of my investments really started piling into stocks. Which can be a bit scary because those can go up and down a lot more, right? So I rebalance. So I try to keep it around 50-50, roughly 50% stock, 50% ETFs and mutual funds. That's kind of where I try to keep it. And then you'll see too, percentage of account. I'm not over 10% in anything. I'm not in any stock. I'm not over 10% in any stock. That's on purpose. I try not to be over 10% in any stock. And then when it comes to like funds and stuff, I'm way over 10% here, but I'm okay with that. It's total stock market index fund. That's kind of why I'm doing what I'm doing and why I think it's worth it. So let's go ahead and I'm gonna run this entire thing through AI and Tiara, and she will look at it and she will basically tell me when I'm doing good, when I'm doing bad, and where I can improve. And I think it'll be interesting. We'll see what she comes up with. All right, so I've uploaded things, and here is what Tiara had to say. So thankfully, she started off with what I'm doing right. So first, she said that I had strong overall performance, which is definitely good. The account total shows that I have a 45.87% gain, which is an impressive improvement from the previous 38.65% gain, right? And that's, I don't even know where she's getting the 38.65% gain, but there's another area here when I did the export that probably shows that. So yeah, I year over year, I've done well. I don't think that's necessarily my genius. I think that's just been the stock market, if I got to be honest with you. So she likes that I'm in growth stocks, NVIDIA. We've got NVIDIA, Apple, Meta. These bigger companies that have a lot of growth potential. Really is a big fan of it. Specifically likes my NVIDIA investment, which has had a 531% gain, which is pretty insane. I got lucky on that one. What can I say? Tiara also really likes that I have blue chip stocks like Apple, Microsoft, JP Morgan Chase, which, like I said, I probably should get some more of that. But those offer stability and consistent returns. So she thinks that's a positive. She also really likes my index fund exposure. I have SPY, VOO, and VT6, which is a mutual fund. But these are broad market funds and really helps with long-term strategies. So she's a fan of that as well. Also likes that I have dividends involved. Not crazy with them, but I do have dividends involved. This dividend growth fund right down here, and then also some high dividend yield index right here. She's a fan of that. She thinks that's basically a good thing. And I try to include, dividends inside my portfolio. I don't concentrate fully on it, but it's something that I definitely want to implement in just because there is some value there for sure. Next, she wanted to talk about areas of improvement. And she got me on some of this stuff. But I think it makes sense, but I know why too. So first is that there's a high concentration of technology stocks. So a significant of my portion, it remains in tech stocks. Apple, Amazon, Meta, Microsoft, NVIDIA. These are growing really well, number one. But number two, I'm also in technology. I'm very interested in it. That's why I have that. So I understand her point, but let's argue a little bit on that one. She also mentioned my beloved leverage ETF, which is SPXL. So her argument against it is that it makes up a significant portion of my portfolio at almost 7%. And basically ETFs are usually made for short-term trading and can be risky for long-term. I get what she's saying, but it's worked out really well for me. I'm holding on to it. I'm doing stop losses. I'm carefully paying attention to it. So I like that one a lot. I think it's kind of a cool concept. But yeah, you got to keep an eye on it. I understand that. Next, she does not like that I'm in speculative investments. I mean, I'm in Vegas, right? Come on, Tiara, you got to let me have some fun. So she thinks that Coinbase and Reddit, they are way more speculative and volatile. I don't think that they are speculative. I don't think that they're crazy volatile. They've done relatively well, but they do go up and down more than most of the others and don't have as much stability. But I have my reasons, and I already told you them, for doing these. And so far, it hasn't bitten me. So, it's a small part of my portfolio, and I'm taking a gamble on them. And I think it's fine to gamble once in a while if you're okay with losing the money just in case it goes bad. But I don't think it's going to go to zero overnight. Next, she mentioned that I have low international exposure. So basically, I have the ETF that is where is it? The Total World Stock ETF, the Vanguard one. Doesn't necessarily like that I'm not more diversified internationally, but I'm in America. I may as well invest heavily into it, right? I want America to succeed. Don't want to invest too heavily in other countries anyway. I'm all in. I'm all in America. And so far it hasn't burned me. Hopefully that keeps going. But yeah, that's kind of my thoughts on that. She does not like that I have no visible bond exposure in my portfolio. I'm young enough to where I'm not too worried about that. Bonds usually are for folks that are looking to preserve their wealth and are a little bit older and, want to be careful with it. I'm still able to kind of be a little bit more risky just because I'm younger. Cash position, she does not like that my cash position is at about 0%. I don't maintain a lot of cash in my accounts ever. I hate cash sitting there because it's basically just getting eaten away by inflation. So when I get cash every single month, I get it in, I invest quickly. And I always do that. Some people say, hey, you should have like 5% cash in your portfolio. I'm just not a huge fan of that. And I will pull out of these markets if it gets really, really bad. I know I shouldn't do that, but sometimes my emotions do get the best of me. But for the most part, I'm okay with not having cash because it's all invested and that's how I like it. She also mentions that some of the positions have gotten quite large. NVIDIA is a big one. VT Sachs is a huge one. That's almost 30% of my portfolio. And that increases concentration risk. I mean, VT Sachs, that one's fine with me because it's a fund, right? I'm okay with that. NVIDIA, I did actually reduce my position there to try to make that better. So what does Tiara recommend that I do to make my portfolio better? Well, first, she wants me to rebalance my portfolio to reduce any overexposure to any single stock or sector, especially considering the significant growth that I've had. I already rebalanced it recently, so I'm kind of ahead of her. This is what I'm comfortable with. I'm not going to reduce, a bunch of positions just to space it out. I think this is a pretty smart investment strategy. So sorry, Tiara, it's not your money. I'm arguing with you, but it ain't going to happen. Next, she thinks that I should have more international exposure. Now, I already talked to you about this. This is America. Now, I'm just all in on America. It really is what it is. I do have some international exposure, but I don't see a need. I mean, the rest of the world isn't really doing as well for the most part as America is in the markets. And I'm hoping that America keeps killing it. So yeah, I'm going to basically keep going with that. She also recommended that I keep a 2 to 5% cash position for flexibility and to take advantage of potential opportunities. Every single month, I dollar cost average into my account anyway. So I don't really have the cash in here, but I keep, depositing cash. So it's kind of okay, in my opinion, the way that I'm doing it, because I do take opportunities when I see them every month. But that's kind of the way that is. So she just doesn't know that. She recommends that I consider taking profits from my highest performing stocks to reinvest them in underrepresented sectors or asset classes. I understand it. You just want me to diversify diversify more, rather. That's what Tiara is looking for. But at the end of the day, these are all doing well. And what I do as well in my stock portfolio is that if I have a situation where something has grown crazy high, like I said, Reddit is starting to get to that point because it's doing way better than I thought it would, I will put a stop loss on it. So I'll basically make it so, if it falls 10% from its highest price, sell it or sell a good portion of it. When I do that, that's how I will get it out. And then I will take that cash and I will reinvest it in. The only problem is that I'm going to have to pay taxes on that. So it's either going to be short-term or long-term gains, depending on how long I've held the stock, which can be a huge pain because this is not a retirement account. This is just a custodial account. So sometimes I have to do that. It's annoying, but it's one of the things that I do to make sure that I don't get too outsized or crazy with one particular position. So I gotta be honest, looking at what she had to say, it's not terrible, right? I think I'm doing pretty decent. Basically, hey, Ron, you can diversify more, you can rebalance more. I know that stuff. Get into international, markets a little bit more. I know that stuff. It's just my preference. Is what I just showed you the perfect way to invest? No. It definitely has its flaws. I've done pretty well with it, admittedly, but I wouldn't say that I'm some, savant in investing. The market's gone crazy, the last really, 4 or 5 years. So I wouldn't say that I've done anything that's amazingly, impressive. I just invest into a lot of growth stocks and companies that I kind of know stuff about and kind of see the direction that they're going and I go with it. I hold on forever and that's pretty much it. But yeah, it's worked for me. I think her critique, the things that Tiara said, I think that's warranted. But at the same time, it just doesn't fit my investment, the way that I approach things, my risk tolerance, et cetera. It doesn't really work with the way that I like to do it. So I have my own tweak on it. But the fundamentals are there where I invest a lot into mutual funds. I invest a lot more, by the way, in my other accounts into mutual funds and things. But even with this one, I still have a good chunk of my money in funds and ETFs. Like I said, about 50%. Just because I think, we can gamble a little bit with stock over here, but let's put a lot into funds just because that's a lot more, it's going to actually return and you can feel comfortable with it and it's not going to have crazy volatility, et cetera. So there it is. Not too bad of a critique, if you ask me. Tiara wasn't too harsh on me. She does not like my leveraged ETF, SPXL. She does not like that one, which I understand. But basically telling me, hey, get more diversified, rebalance more, or focus on international markets. I get it. It's just not me. It's just not something I want to do. I feel like every investor is different. My risk tolerance, my age, the things that I believe in, et cetera, they all come into play there. But I think that the core principles of investing are pretty well represented even in that account. Like I said, 50% in mutual funds and ETFs and the other 50% in stocks. Honestly, really aggressive for a lot of people. But in a stock trading portfolio or a stock trading custodial account like that is, I think it's pretty reasonable. My other accounts are much more boring. They're much more boring. But that all said, one of the things that we want to do here is make sure that you don't make a bunch of investing mistakes yourself, right? You just saw what I did. I'm not perfect, but I think I do pretty decent. But if you're new to investing, there are definitely investment mistakes that you want to avoid. And I created a whole video about this that you can check right over here. Or if that doesn't sound of interest to you, you can check right over here for my most recent video instead. Now remember to please like this video if you enjoyed it so that YouTube will share it to other people. And as always, make sure that you subscribe to the channel to unlock financial success one AI chat at a time. Thanks for watching.